Hello, what is an order block? What is the difference between a bullish order block and a bearish order block? Internal order blocks, external order blocks. Which strategy am I supposed to use when I'm trading using order blocks? Now, all this is going to be explored in this particular video. And particularly for this, I'm going to make it very practical, simple, but easier for you to understand. We shall, in simple terms, happen to understand what an order block is. We shall go directly onto our chart and see how do we use order blocks when we are trading. What's the difference between the bullish and bearish order block? What does externally, deep, extensive intellectual understanding of an order block in Forex trading? My name is Isma, as usual from FXKampala. If you haven't subscribed onto this particular channel, please do, such that you enjoy the content that we happen to release. You can also go onto other social media platforms as Facebook, Instagram, TikTok, LinkedIn. Just type in FXKampala. You'll find such amazing, affirmative information to do with Forex trading. In simple terms, by definition, an order block is, in simple terms, a zone or a chart where big financial institutions like banks placed larger buy or sell orders, causing the prices to move strongly. Think of it like where the smart money go into the market and place their orders. Now, these areas are at times we consider them as areas of interest in the market. To be simple and to make you understand, an order block is particularly that zone, as you can see on my platform. It is this zone that usually happens, that comes along. And for this case, this is the zone that I'm talking about. This means that big institutions, banks, or smart money have placed their orders here, meaning that wherever market goes, it always has to come back and respect this. So you identifying these levels definitely means that you're actually waiting for the market to come back such that it can always respect them. There are quite two expectations of the market as it comes to approximate to this level. We either expect a bounce off, this particular zone, or we expect a breakout, particularly of this particular order block or this particular zone. So many of you have been asking, wherever that I find such a condition, because what makes this an order block? One is this sharp movement that comes along as the market approximates down in this particular opposite direction. So for instance, this market was coming down here, and then it showed to you that it was going up. Now, this kind of order block is what we consider as a bearish order block. What makes it a bearish order block? It's because it's coming down. Now, the sharp movement along here shows significance or shows sign that we are experiencing around here smart money. Now, the candle that is actually in the opposite direction immediately after the sharp move shows the beginning of an order block. So if the smart money direction is bearish, like for this case, there is that candle that is always opposite to the direction of the market. Like for this case, it's bearish, okay? But then this candle is bullish. So this candle states the beginning of an order block that is opposite to the direction of the trend. In scenarios whereby the market or the order block is bullish, in other words, expecting the market upwards, then the bearish candle that is slightly before the rapid movement or the sharp candle that comes after it, that is opposite, then marks the beginning of an order block. So wherever has been trading, there are two things that at least should be in place. One, you have to somehow be relatively the things that you need to observe if you're developing or if you're creating or if you are using an order block is actually the sharp movement that significantly proves that there is existence of the smart money. Two, there has to be a candle that should be always moving in the negative side. In other words, the market has to first show you some sign that the market was eventually, like for it, this movement here, it has to be there, showing that the market was going up, but unfortunately, something happens. So the market has to be moving in the negative side. Secondly, it has to be, thirdly, there has to be more of a zone-like thing. So this candle has to be a zone. Then after it coming, identify it. When you identify it, always expect the market to come and fill this to continue in the negative direction as it did here. You see, the market continued going further. So your job was to identify this. When you identify this, what you have to do is to come to the market here and say, when the market approaches this, the stop loss areas has to be above, and then the take profit can be as further as possible downwards. So that's why this market eventually came and then reached here. It doesn't necessarily need to reach exactly on here. It can come within, you know, around here or here, but not too far, but then not too also small. Or it can at times come and fill in here. So there is no specific, you know, measurement or calculation or number of pips that we always have to look for. Just make sure that you know the order. Just make sure you are specific of the coming back of the market, but not so certain that it can come up to here, it can come up to here, it can come up to here, but we don't expect it to come above somewhere here. So anywhere below and somewhere here, we can always consider that as a coming back and fooling or reaching the order block and then proceeding downwards. So it's as simple as that. The moment you do that, then you're definitely going to trade based upon order blocks. But then I highly recommend that when you're using order blocks, make sure that there is no news. Relatively look for slightly bigger time frame. Don't go for quite very low, smaller time frames. And of course, when you have that in place, then you've explored what order blocks are. And also there is a possibility that it may come and break here. So don't just focus on only the consolidation here, the reverse here. You can also look out for breakouts above here. So if that happens as well, then always respond to the market appropriately and then trade by putting a buy order or a pending order. And I highly recommend people to always be using pending orders in their trading, with the interest of time and the purpose of making this video very precise and simple. I would love to stop from here. In case you have any challenges, contact us. We'll always be in position to help you. Have a lovely day. Enjoy.